Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As you can see, back in the Dragon Capsule in sunny and hot Florida. As we do each and every week, the stocks that you see on your screen now will be the stocks featured in this video. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this video. All right, so let's take a look at the chart of the market. As you can see, we broke out of this triangle that we talked about last week. Few of the markets were in triangles. They've all broken to the upside. Next step is what happens when we get up to this wave 3. As I put the moving averages on, you can see that there's a slight separation from the 10-day moving average, but nothing too significant. But a nice clean break here. We also have the break in the 10-30 moving averages, a bullish cross there with the 10 moving up above the 30. So what's going to happen when we hit this wave 3 high? Remember how we had the dueling zigzag patterns? Clearly the upside zigzag is the one that's in play. But we're going to find out next week because we have the CPI report on Wednesday. And I think that's going to determine whether or not we bump our heads against this previous wave 3 and come back down a little bit, or are we able to break above it and head up towards that target, which is 550, where that zigzag pattern has its C wave extension. So all eyes will be on the CPI report on Wednesday, I believe. All right, so taking a look at rates here before we go into the other markets, there's been some help there. Looking at the TNX, you can see that rates are coming back down a bit and staying away from what we were worried about was an extension in this wave 3 up to the 161.8% fib level, which would have tested those highs back from October and given us awfully close to a 5 handle on that 10-year. And I think that would have been a spook to the market. But we talked last week about how Chairman Powell in the Q&A mentioned that, and it wasn't in the prepared remarks, but it was in the Q&A, that they were going to slow the pace of reducing their balance sheet, which is a form of easing, because when they're raising rates and they're reducing the balance sheet, that's two forms of tightening. So they've stopped raising rates, and then they're going to slow that pace. So kind of an easing, and that's been reflected in both rates and in the dollar. So the dollar has come back down a little bit as well, up from those highs, also around those November highs, hanging in there a little bit more. Maybe there's some people saying, let's just wait and see what that CPI report says on Wednesday and whether or not we're going to get a jump back up in rates and therefore jump back higher in the dollar. But the only thing really to talk about rates in the dollar right now is that they are supportive of this upward breakout from that triangle, but all things could change next week. As I mentioned, let's take a look at the VIX. And interesting on the VIX, we are right back down to where we were in mid-March, as you can see, right back down at these lows here. So we've broken out of this trading range, the trend channel. We've broken to the upside, and we got awfully close to those highs from November. And now we've come back down and are right around these lows from March. And we're almost getting to the point where maybe that VIX is getting a little bit low. Is that going to be a foreteller of some potential volatility next week? I think we're going to have volatility with the CPI. I don't know which direction necessarily we're going to go. But if we break below this level, then we'd have to be looking at something around 12 and maybe lower on the VIX. But we'll be watching to see if we hold here. I don't think we're going to get a whole lot of activity on Monday and Tuesday with that report looming, but who knows? Maybe people link their bets ahead of time. This wave 4 here would be suggestive of move higher, but you can see it's a big retracement there. So you take the Elliott wave off when you break that 78.6% fib level in the wave 4. It's not an Elliott wave impulse pattern anymore. So we're just on our own here with plain old support resistance, and whether or not we can hold here in this 13 area or not, or move back to the downside or the upside. We'll see how that plays out. All right, so let's take a look at some of our other markets. As we look at the chart of the DIA, you can see very similar pattern. We didn't have quite the same triangle, even though we had a small one there, but we also have a bullish 1030 cross here and also nearing resistance. So the S&P and the Dow both heading up towards those previous wave 3 highs from March. And as I said before, I think it's going to be determined by what happens with that CPI report on whether or not we break higher from here or not. Obviously, we want to look at the Qs, especially with a little bit of break in rates. And as you would expect, they're breaking out too at a nice symmetrical triangle there. One of the things I love about this software, and if, by the way, you haven't gone and gotten a copy of the software yet, go to hub.com, HUBB.com. This new Elliott Wave software is in beta form. It's free, nothing to download. It's all web-based. You can get live Elliott Wave charts. It's great. So make sure you go get a copy of it. A lot of you making comments on previous videos on how much you're enjoying it. So many things to go through and experiment with and learn about. All right, so back here to the DIA with that positive 1030 cross nearing resistance. We'll just see if we can get above that 450 level. We still have support down here at that previous wave 3 high if we do bump our heads here on a bad CPI report and start to head back lower. But with the Fed playing politics here, they might even spin that in a positive manner. Who knows? Looking at the IWM, this one's going to get real interesting soon too, because the resistance level's at 210, which is not only the upward breakout from this triangle with the bullish 1030 cross here as well. You can see the wave 5 right smack in the middle of the tap box. But if you've been watching for a while, you know the drill here. Trading range has been between 190 and 210 on the IWM for quite some time, and then going back in the past. If we break to the downside here, we'd have to break below 190 where this support line is here, and then we could start talking about maybe some sort of trading range back in the 170 to 190 range. We'll see how that plays out, but all the markets kind of creeping up towards resistance, which is going to make next week really interesting. We talked about the VIX already. So I think we're going to see some volatility next week, not like we had more calm markets this week. All right, let's take a look at some stocks of interest. And by the way, if you haven't been watching over the past few weeks, we're giving away a free level 3 subscription from our website, ewotrader.com. It covers off impulse, volatility, and time strategies. Impulse strategy is AI-based for directional trading. The volatility strategy is breakouts of triangles that we don't pick a direction. We just let it go with triangles on. And then the time strategy is made for sideways. It's a good income strategy. So we cover all bases, and it's worth thousands of dollars for the whole combination. And we're giving away one of those each and every month this year. And all you have to do in order to become registered for the drawing is leave a comment under this video. That puts you in. And good luck to everybody on getting a free subscription to our website. So when you leave the comments, by the way, I read each and every one. I answer as many as I can, time and travel permitted. And when we go to look at stocks of interest, I take those from you guys as well. We can't get to them all, but I try to pick as many as we can each and every week. All right, so leaving the IWM, let's go take a look at one that y'all ask about a lot, and that's Tesla. And when we look at Tesla here, you can see that we have this big potential triangle. We did make it up to 200, but we couldn't get above 200, and now we're headed back down. But notice we filled this gap here. Is that going to be enough, or do we have to come down and test this level? You can use this cursor button here, and it will give you the exact price over on the right-hand side. So we're right at 168 now. 162 or so is where that level support is. It seems like we want to come down there. Notice we can come all the way down to this previous wave 5 low and stay within the mouth of this triangle. So it does appear that maybe we're going to go through some more consolidation here on Tesla. We have the 10, 30, and 50-day moving averages all basically at the exact same spot. So whether or not we're going to break out soon, I think maybe we're just going to churn here for a bit longer and then see where we go. We were able to hold this area down here around 150. We didn't get the Katie bar the door with Tesla, but boy, it was getting awfully close to that kind of a move. But for now, I think we're just going to have to wait and see what this churn does here in Tesla and which way we break from. It's early, early formation of this triangle, and it may not continue in here, but I think it's worthy to watch. One of the other cool features about this software is when you've looked at a chart and you draw your lines, it remembers them. So when you come back to it, they'll still be there. So you don't have to go back and redraw them every time. And it also helps when you're doing analysis and you're looking at something, and then maybe you come back a few days later and like, what was I looking at? It was all right there for you. So it's pretty cool. Looking at TLT, not only do y'all ask about it, but it gets asked about in TradeFinder quite often. We do TradeFinder each and every week, Tuesday, now during live market hours, when we can utilize the live Elliott wave feature during the market hours. All you have to do is go to the link that you see on your screen and register. It's free. We talk the markets, we look for trade ideas, and we have a live Q&A. We have a great community of traders ask for great stocks, etc. So I hope you'll join us if you haven't already. Again, live during the market, Tuesday at 1 p.m. Eastern Time. All right, so that gets asked about a lot, both here in these updates as well as TradeFinder. And notice on TLT, last time we looked at it, we had this support here at 87.5. That did hold as the wave 3 low, but notice that we have not crossed above the 30-day moving average with the 10 yet. We did get above 90 there, so we got above this little small channel here, and now we'll find out. I think this is going to be a mover when we get to the CPI as well. Remember, TLT now is showing you prices on the 20-year, where TNX is showing rates on the 10-year. So that's why they look in opposite directions, if you will. Prices and yields move in inverse proportions. If you're not familiar with the bond market, I think you should be. I've always said that I think people should have at least a good working knowledge of the bond market to be a good equities trader. You don't have to be an expert by any way, shape, or form. But there's a lot of money in the bond market, so it bears paying attention to. So we'll see if we get a move higher in prices here on the longer end of the curve here on the 20-year and move up towards that 92.5 level, or do we break back down from 90 and head to 87.5? So we've got a bit of a trading range here on TLT between 87.5 and 92.5. Some other stocks y'all ask about, Uber, and we had a bit of a move down there, but notice where that wave 4 is, right at a 50% wave 4 correction. So we went sideways for a while at 80 with that wave 3 high. We broke down, we filled this gap right here from February. So there's the gap right there. We filled that. We came down here and we had just a little bit of consolidation here. We jumped up, tested the 50-day moving average. That's the royal blue line. We came down, set that wave 4, and we're trying to bounce up, but we're not back above the 10-day moving average yet. So that wave 4 could hold. 50% is a strong level, but I think we need to get back above that 10-day moving average if you're interested in going long Uber. So I wouldn't necessarily jump in just yet. Let's let it get back above the 10-day moving average, and if it's going to do that, let's let it get above that little consolidation that it had there at 70 as well. But if it can do that, then we might be off and running in that wave 5, and as you can see, that would bring us up to a projected level of somewhere around 90 or so. But we got to get back above 70 and that 10-day moving average before we start talking about that. ULTA, not good in the beauty sector. Big drop on earnings here. Another one where the wave 4 has gone too long, so that pattern becomes disqualified. So basically what we're looking at now is, can we hold in this area right through here? Can we hold in this area of 400? Big round number. We held there in October, November, took off, had a good earnings report, then a bad earnings report, and then we're back down. We're also getting some separation here to the downside between the 10-day and the 50-day. You've heard me say the expression a lot, no security in any time frame gets very far away from the 10-day moving average, and you can see what happened here. We got up here a little bit overbought, back down to the 10-day moving average, hugging along it here. We got a little bit below it there, right back up to it, big gap down, and now we've come down and consolidated enough to where we are at least back to that 10-day moving average, and we're trying to break back above that 400 level, but we need some follow through. Today was a start, but let's see if we get some follow through there and can get back above 400 if this level is going to hold going into next week. So that'll be the key to watch there. Great question asked about the yen. We haven't talked about the yen much. We talk about the US dollar a lot. It's a spot on question here. The yen has been moving higher as Japan has completely changed course away from their staying at zero or negative rates to where they started raising rates, and that's being reflected in the currency. Some people say it was manipulation, currency manipulation, like China does a lot, but maybe they're just figuring out that keeping rates at zero wasn't working and they needed to try something different. So we had this big wave three run here on the yen, and now we're going through some consolidation. Good separation here between the 1030 and 50, nothing overdone, just kind of right in line as you would expect. But we do have a little channel that we formed here. So we've had some consolidation here on the yen between 105 and 110, at least on the DXJ here with the ETF. So can we break above that 110 level? When you see a pattern like that, it's only a 20% correction. Notice the wave 4 here is still green. So the algorithm is saying, we're not 100% sure that that wave 4 is in yet. It hasn't gone low enough. But if it breaks above that 110 level, that 4 will turn purple and we'll be off in the wave 5. But we still have to respect that 110 could hold, and maybe we come back down and test 105 or lower. So I think we're in wait and see mode on the yen, but certainly a nice run throughout the first part of 2024 on the yen. So enjoy looking at that. All right, so let's take a look at Coinbase. And as you can see here, just kind of consolidating. Bitcoin itself can't seem to get above 65,000. We're in the range there between 60 and 65, and that's reflected in Coinbase as well, that we're just sitting here on 200. We had these triangles we talked about last week, so I won't spend much time there. Had a symmetrical triangle, broke out, consolidated again. Happens, doesn't happen often, but it's kind of interesting when it does. Broke to the downside again, but at least so far we've held 200, and we're right at the 38.2% fib retracement level. So if Bitcoin can get its that going, then I think Coinbase takes off with it. But for now, we've got to keep a close eye on this 200 level on Coinbase because if we break below that, it's going to be a quick move back down here to 150. You can see how fast we moved up from 150 to 200. So there's really nothing in the way of moving down to 150 if we break 200. So we have to break 200 with a follow-through day for that to happen. But so far, we are trying to hold that 200 level, and that's what we'll be watching for next week in crypto land, at least as evidenced by Coinbase. Let's look at some of the metals. Let's look at silver. You guys have asked about silver. I think silver is really interesting right now. Look where we are on the SLV. So we had that big run up. We talked about how we might need to rest. Didn't necessarily think we're going to pull back this far, but we did. I'm watching very closely SLV, itching to put out an alert there to the upside, but you can see we're at resistance here at 25.5. We need to break that level, but the 10-day moving average is moving up, maybe even another sideways day, but I'm going to watch this really closely on Monday. It's a very well-formed Elliott wave impulse pattern with that wave 4 right at 50% and holding this support resistance area here in around 23.5. So if we can break above this 25.5 level here, that wave 3 high from April, I think we have a great shot of SLV going up towards this wave 5 target up near the $30 range. So that's one to keep an eye on next week. So that's what I'm looking at there, and got an itchy trigger finger here for SLV. So I'm glad y'all asked about that one. It's certainly a place that's on the top of my watch list each and every day. All right, so let's finish up this week with USO. We get asked about oil a lot. I showed you this zigzag pattern, just spot on with Elliott wave. If you're new to Elliott wave or zigzag patterns, etc., you can find a better example than this. We had this nice wave 3 move to the upside, and then we had a corrective wave 4 with a perfect zigzag pattern in it. The B wave correction going right to the 61.8% level. That's going to lead you to an expected 100% extension. And that's exactly where we went in the USO. And we've just been holding here. No, we hit the 10-day moving average on the high. So we want to see if we can get back above that level. Now, there's still a possibility that we break below this 100% extension, and then the next level would be 161.8. You always want to watch that on these zigzags, especially when you had a 61.8% corrective level. What happens normally when you have an extension like this is you'll go back and test that previous fib level. We're getting awfully close to testing that 61.8% level here, and that means that you have to keep an eye on the possibility of a renewed move lower. Now, that zigzag pattern has done what it's supposed to do. I want to be clear on that. It's just the potential for an extended level is still there. But if we can get back above this 50-day moving average and cleanly back above the 10-day moving average, then the wave 4 may be in with a perfect zigzag pattern here, and we might be heading back to the upside again on oil. I've enjoyed a little bit of a break here at the gas pumps. You know, they're slow to bring prices down when oil goes down. But we got to keep an eye on this and make sure that we're not off to the races again on oil. It certainly would be an issue for the equities markets as well as an inflationary indicator as well. So thanks as always for your time. Look forward to talking again next week, and we'll know what that CPI report is when we talk to you next week. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.